I didn't think it was a radical idea to say that every investment must reduce carbon emissions, but it is radical. This country has a carbon epidemic. This is going to be a devastating long-term impact, and we have to get at the fix now. And frankly, the investment opportunity is that great.
What's going on, money lovers? Welcome back. So you just heard a quick snapshot of the company from their CEO, Jeffrey Eckel. And so the company we're going to be talking about today is called Hannon Armstrong, and its ticker symbol is HASi. Hannon Armstrong is the first U.S. public company solely dedicated to investments in climate solutions, providing capital to leading companies in energy efficiency, renewable energy, and other sustainable infrastructure markets. With more than $6 billion in managed assets, Hannon Armstrong's core purpose is to make climate-positive investments with superior risk-adjusted return. Hannon Armstrong follows a safe and proven business model that has withstood the test of time and has only continued to see better and better returns. This is a company that's been around for over 30 years. You're not investing in some brand new technology where there's no guarantee it'll work out. What this company does, they have been doing successfully for over 3 decades. Our vision is that every investment should improve our climate future, which is why we require that all prospective investments are neutral or negative on incremental carbon emissions or of some other tangible environmental benefit, such as reducing water consumption. Our management team has extensive relevant industry knowledge and experience dating back more than 30 years. So the business operates under 3 main segments: behind the meter, grid connected, and sustainable infrastructure. Hannon Armstrong invests in behind the meter building or facility specific distributed energy products which reduce energy usage or cost, including through the use of solar generation, electric storage, or energy efficiency improvements such as heating, ventilation, and HVAC, lighting, energy controls, roofs, the list goes on. So one of the things that's really cool about this company is not only is it making a difference, it's reducing carbon emission, it's also helping the businesses they work with to reduce cost and improve on efficiency. And here are some investment examples. As you can see, they're heavily involved with energy efficiency. They work with solar and wind. They're involved with energy management as a service. Their grid-connected segment makes investments in grid-connected renewable energy projects that deploy cleaner energy sources such as solar and wind. They have many examples of their onshore wind investments, as well as solar. Their sustainable infrastructure segment invests in sustainable infrastructure projects that positively impact the environment or enable the efficient use of natural resources, including upgrades to power or distribution systems and stormwater remediation projects. They focus on assets that provide an essential public service, typically have contractually committed cash flows, and maintain a strategic competitive advantage while increasing energy system resiliency, positively impacting the environment, or more efficiently using natural resources. Earnings have rapidly increased from 2016 to 2019, more than doubling from a little under 36 million in revenue in 2016 to over 77 million in revenue in 2019. Through 3 quarters of 2020, they have earned over 66 million in revenue and are on track to increase revenue for another consecutive year when Q4 earnings are released. It's clear that the new administration is looking to continue to improve upon sustainability efforts, which will only help Hannon Armstrong continue to thrive. This is reflected in the massive run-up of their stock price, which has more than doubled in the past year. This is also a real estate investment trust, or a REIT, and pays a solid dividend of $1.36, which they have paid and increased over the last 2 years. The yield was much higher, but is only 2% now because of the stock's massive run-up. Armstrong has far outperformed the S&P 500 over the past 5 years, with an average annual return of 27%, almost double that of the S&P 500's 14%. Hannon Armstrong's portfolio is well diversified with over 200 sound investments. Now, while it's not as exciting a company as your Teslas or your types of companies that you see ARK investing in, as someone who's heavily invested in the ARK funds and the Teslas of the world, this is a company that can bring some balance to your portfolio. They're not doing anything flashy and new, but they are doing something that is proven and stood the test of time, and something that they will only continue to improve upon by further improvements to efficiency, technology improving rapidly. This company has a proven business model with over 30 years of experience, and they will only continue to reap the rewards of a society that is rapidly shifting towards sustainability. This is a company that has been doing and will continue to do great things for the planet, for our future, and probably for your bank account. Let me know what you think of Hannon Armstrong in the comments below. Are you buying this sustainability company? Why or why not? This is Vinny from the Investment Club, and I'll see you next time.